Dagang Exchange, or DNeX, saw its share price tumble as much as 39.7% in afternoon trading today, after the technology group started arbitration proceedings over a proposed investment dispute involving one of its companies. The plunge prompted the bourse to suspend its intraday short selling. The stock fell to an intraday low of 45.5 cent before paring losses to end still down 33.1% at 50.5 cent, bringing the grouper market capitalization of 1.59 billion ringgit. The last time the DNeX dropped below the 50 cent mark was on February 11, 2021, when it stood at 43 cent. In a bourse filing, the DNeX said its subsidiary, DNeX Semiconductor, had issued and served a notice of arbitration to start proceedings against Chinese firm Mimastronics Technologies, or MIMAS. MIMAS is wholly owned by Tethystronics Technologies Co., a special-purpose vehicle ultimately owned by Beijing Integrated Circuit Advanced Manufacturing and High-End Equipment Equity Investment Fund Centre, which holds 40% equity interest in Silterra, Malaysia. Silterra is a 60% owned subsidiary of DNeX Semiconductor, which, together with DNeX, inked a share subscription agreement and shareholders agreement with MIMAS in January this year. According to DNex's filing, it maintains that an approval by the Ministry of International Trade and Industry is necessary for the deal to go through, while MIMAS believes otherwise. DNeX said it does not expect any material financial impact to result from this development, and Silterra remains a 60% owned subsidiary of DNeX Semiconductor. The research arm of credit rating agency Fitch Solutions has projected UMNO-led BN to win the 15th general election. Fitch Solutions Country Risk and Industry Research said in a note today that this outcome will predominantly impact the consumer and retail sector through the implementation of income-boosting policies and the lowering of certain taxes. This will increase disposable incomes for households, especially those towards the lower end of the income distribution, i.e. with annual disposable incomes of under $10,000 or 45,470 ringgit. It said a victory by PH and PN will likely have a similar impact, but specific policies that are exclusive to the two coalitions have a low chance of implementation due to their slimmer odds at victory in this month's polls. According to the firm, a new BN term would lead to a greater level of state intervention in the economy, an expansion of racial affirmative action policies, and a reintroduction of the GST that was abolished by the then PH government in 2018. It expects a BN coalition government to govern relatively pragmatically and continue its policy of openness to foreign investments. Gas Malaysia recorded third quarter FY22 net profit of 95.66 million ringgit, up 53.4% from a year earlier on higher gross profit, finance income and contributions from joint venture companies. Revenue rose 34.8% to 1.86 billion ringgit on higher average natural gas selling prices in tandem with global market prices, mitigated by lower volume of natural gas sold during the quarter. Compared to the immediate preceding quarter, net profit fell 10.9% from 107.34 million ringgit, despite revenue rising 4.9% from 1.78 billion ringgit for the second quarter of FY22. The group did not declare any dividend for the latest quarter. Looking ahead, Gas Malaysia said it expects to deliver a satisfactory performance for FY22, adding that it will take prudent measures to maintain its operational efficiency to remain competitive and seek opportunities to grow its businesses. Shares in Gas Malaysia closed up 0.59% at 3 ringgit 40 cent, giving the group a market capitalization of 4.37 billion ringgit. MISC saw its third quarter FY22 net profit more than double to 820.6 million ringgit on higher revenue and operating profit. Revenue for the quarter rose to 3.61 billion ringgit, driven by a higher top line from all segments. It declared a dividend of 7 cents per share to be paid on December 14th. Reviewing its performance, its President and Group CEO, Captain Rajalingam Subramaniam, said MISC remains steadfast in executing ongoing projects with continued discipline and focus. He highlighted the group's robust financial standing and said it will be steering its mid to long-term ambitions to pursue new business opportunities as it advances to the net zero future with greater synergy and collaboration with stakeholders and partners. On its prospects, MISC said spot rates continued to surge in the LNG shipping market in the third quarter of 2022, and in the near term, prospects remain positive, backed by growing global demand for the commodity. It aims to replenish its order book and venture into carbon capture and storage as well as renewables. MISC's shares gained 1.6% to end the day at 7 ringgit 20 sen for a market capitalization of 31.2 billion ringgit. S&P Global Ratings expects the Malaysian banking sector's loan growth to stay at 5 to 6% in 2023, on the back of the country's economic stability, which will support the creditworthiness of Malaysian businesses and consumers. Gross domestic product is forecast to grow at 6.6% in 2022 and an average of 4.5% over the next 3 years. In S&P Global's 2023 Bank Outlook commentaries, the research firm said that domestic banks can also ride out rising asset quality risks, as solid capitalization and provisioning buffers could offset asset quality pressure. The lender's solid capitalization at 14.3% common equity Tier 1 ratios as of June 30th and provisioning buffers of 1.8% of total loans will help them to absorb a moderate rise in credit stress. However, it noted that asset quality is expected to deteriorate and the industry's non-performing loan ratio will likely rise to 2.5% to 3% over the next 2 years, from 1.8% as of end June, following the expiry of moratorium programs. Credit cost will decline to 30 to 40 basis points, it said. It sees banks' earnings edging closer to pre-pandemic levels in 2023.